Have you ever dreamed of picking winning stocks every time? Imagine consistently growing your wealth by investing in companies poised for success. While there's no guaranteed formula, understanding key principles can significantly increase your chances of picking winners. This essay will equip you with practical strategies and insights to navigate the stock market effectively. We'll explore fundamental analysis, technical analysis, and industry trends as essential tools in your investor toolkit. Remember, successful investing is a marathon, not a sprint. By mastering these concepts and exercising patience, you can be on your way to building a profitable investment portfolio. Let's embark on this exciting journey to unlock the secrets of consistently picking winning stocks. Fundamental analysis is like looking under the hood of a car before buying it. Just as you wouldn't purchase a vehicle without understanding its engine, you shouldn't invest in a company without examining its financial health. You want to understand the engine, the company's financials. This involves diving deep into their income statements, balance sheets, and cash flow statements to get a clear picture of their financial stability. Key metrics like earnings per share, price-to-earnings ratio, and debt-to-equity ratio can tell you if a company is financially healthy and if its stock is potentially undervalued. These metrics provide insights into the company's profitability, valuation, and financial leverage. Let's take Reliance Industries as an example. This company is a giant in the Indian market and has a significant global presence. As a conglomerate, Reliance has diverse businesses from oil and gas to telecom and retail. This diversification can be both a strength and a challenge, making it essential to analyze each segment's performance. By analyzing their financial statements, you can assess their profitability, revenue growth, and debt levels. This detailed examination helps you understand how each business segment contributes to the overall financial health of the company. This information helps you determine if Reliance's stock is a good investment opportunity. It allows you to make informed decisions based on solid data rather than speculation. Fundamental analysis helps you separate the wheat from the chaff, identifying companies with strong financials and growth potential. It enables you to focus on businesses that are likely to perform well in the long run. This approach is crucial for long-term investors seeking to build wealth steadily. By focusing on companies with solid fundamentals, you can create a robust investment portfolio that stands the test of time. Technical analysis focuses on the charts, which are essentially graphical representations of a stock's price movements over time. By studying these historical price movements, analysts can gain insights into the stock's past behavior and predict future trends. It's like reading the story the market is telling about a particular company, where each candlestick and line on the chart represents a chapter in that story. Traders use technical indicators to identify trends, patterns, and potential buy or sell signals. These indicators are mathematical calculations based on the price, volume, or open interest of a stock. One popular indicator is the Relative Strength Index, or RSI, which measures the momentum of a stock. It helps traders understand whether a stock is overbought or oversold. Another widely used indicator is the Moving Average Convergence Divergence, or MACD. This indicator helps identify changes in the direction, strength, and duration of a trend. Consider Infosys, a leading IT services company. Its stock is often analyzed using these technical indicators. By analyzing its price charts and applying indicators like RSI and MACD, you can identify potential entry and exit points. This can be particularly useful for timing your trades to maximize profits. These technical signals can help you make more informed trading decisions, reducing the emotional aspect of trading and relying more on data-driven insights. Technical analysis complements fundamental analysis by providing insights into market sentiment and potential price movements. While fundamental analysis looks at a company's financial health, technical analysis focuses on the market's perception of the stock. It's an invaluable tool for both short-term traders and long-term investors. Short-term traders can use it to capitalize on quick price movements, while long-term investors can use it to identify the best times to enter or exit a position. Identifying and capitalizing on industry trends can significantly enhance your investment returns. Imagine investing in e-commerce giants like Amazon during the early days of online shopping. Understanding industry trends allows you to spot potential winners before they become household names. Consider the Indian IT services sector, with companies like TCS and Wipro. These companies have benefited immensely from the increasing global demand for IT solutions. By recognizing this trend early on, investors could have capitalized on the substantial growth of these companies. Staying informed about industry developments, technological advancements, and changing consumer preferences can give you an edge in identifying promising investment opportunities. Section 5. Building a fortress. The importance of diversification. Diversification is like not putting all your eggs in one basket. It's about spreading your investments across different asset classes, sectors, and geographies to reduce risk. Instead of investing solely in one company or industry, consider a diversified portfolio comprising stocks from various sectors like banking, such as HDFC Bank, automobiles like Maruti Suzuki, and consumer goods like Asian Paints. This way, even if one sector underperforms, the others can cushion the impact. Diversification is crucial for mitigating risk and safeguarding your investments from market volatility. It's a cornerstone of any sound investment strategy. Section 6. The long game. Patience and discipline in investing. Investing in the stock market is a marathon, not a sprint. Patience and discipline are your greatest allies in this journey. Avoid making impulsive decisions based on short-term market fluctuations. Remember, Rome wasn't built in a day, and neither are successful investment portfolios. It's natural to get caught up in the excitement of the market and make hasty decisions. However, it's essential to stick to your investment plan and not let emotions dictate your actions. Remember, patience and discipline are the hallmarks of successful investors. By staying the course and remaining focused on your long-term goals, you can weather market storms and come out ahead. Section 7. Real-time insights. Analyzing stocks with TradingView. Platforms like TradingView provide powerful tools to analyze stocks and make informed decisions. You can access real-time data, charts, indicators, and even connect with other traders to exchange ideas. Let's say you are interested in analyzing Reliance Industries. You can use TradingView to track its price movements, apply technical indicators, and even backtest your trading strategies. This hands-on experience can be invaluable in honing your investment skills. Utilizing such platforms can empower you with the knowledge and insights needed to make confident investment decisions. Section 8. Key takeaways. Your roadmap to successful investing. In conclusion, consistently picking winning stocks requires a combination of knowledge, strategy, and discipline. It's not just about luck or following the latest trends. It's about making informed decisions based on solid research and analysis. Remember these key takeaways. Fundamental analysis. Analyze a company's financials to understand its true value and growth potential. This involves looking at earnings reports, balance sheets, and cash flow statements to gauge the health and performance of a business. Technical analysis. Use charts and indicators to identify trends, patterns, and potential trading opportunities. By studying price movements and trading volumes, you can predict future market behavior and make timely investment decisions. Industry trends. Spot and capitalize on emerging trends to identify future winners. Keeping an eye on industry developments and technological advancements can help you stay ahead of the curve and invest in companies poised for growth. Diversification. Spread your investments to manage risk and maximize returns. By investing in a variety of assets, you can protect your portfolio from market volatility and ensure more stable growth over time. Patience and discipline. Stay the course, avoid emotional decisions, and think long-term. Successful investing requires a steady hand and the ability to stick to your strategy, even during market downturns. By applying these principles and continuously learning, you can navigate the stock market with confidence and build a profitable investment portfolio. Education and experience are your best allies in the world of investing. Now it's time to put this knowledge into action and begin your journey toward financial success. Start small, stay informed, and watch your investments grow over time. The road to financial independence is within your reach.